Thank you so much for joining me on the show, Sam. I'd first like to start first with the conversation I just had with Bruno on Lafarge. I'd like to hear your thoughts on Lafarge.
Well, I think that Lafarge is the right decision that they've taken to divest again from the South African operation. Because if you look back to 2013, as at 2013, Lafarge was actually, or WAPCO as it was called then, was actually outperforming Dangote Cement in terms of earnings per share in 2013. Sometime back in 2009, they had gone into some debt for the expansion to go to 4.5 metric tons of cement. And that took them to about 40 billion in debt. Fast forward to about 2012, they had halved that debt to about 20 billion in 2012, leading to 2013. Now, the merger or consummation of their businesses happened in 2014, so leading to Ashaka Cement, WAPCO, and all of them coming together. And since then, the numbers have really gone south. So it's a marriage that hasn't worked, and I think that is the right decision right now to split the operations once again and become more nimble, become more efficient, and be able to manage especially their financing cost, which is something that, interest expenses ballooned over time because when the consummation happened, the shareholder loans that other entities were carrying, especially the South African entity, consolidated on the balance sheet. And so you find that interest expense became too high to handle.
All right, then let's look at another stock. We saw quite some sell-offs yesterday in Forte Oil on the news, and back on the news of the exit of Femi Otedola from the company. I'd like you to speak to what this means for the company going forward.
Well, I think what's happening is a situation where people they are priced in when the announcement was made that there was going to be an exit. We found that the stock rallied a bit because some people wanted to ride with that. And now that it has happened, I think it's just the market recalibrating on where the price ought to be. So for the new management of Forte Oil, what they need to do is to prove themselves. They have the next results will be, the next quarter will be instructive, and hopefully they'll settle down very quickly and begin to give out good numbers. And then I expect that the stock will pick up again. But this is just the market reacting to the indices and the fact that we know these guys, they took AP, they've turned it around. Now we have a new player in the market heading the place. We want to see how it plays out. All
right, then. Another story I also want to talk about is Airtel. Airtel play in Nigeria. We're seeing the dual listing both in London and possibly in Nigeria. I'd like you to see what this means for the market as well.
Well, I read somewhere that it already applied to the SEC to list their shares on the Nigerian stock exchange, which for me is fantastic news. Because what you've always had with the Nigerian stock exchange is the fact that the market has not been deep enough over time. So MTN, we saw what happened when MTN listed. We had like 8 days, 9 days of a rally. MTN alone pulled up and became one of the bellwether shares immediately. So when Airtel comes in, then that subsector, the telecom sector, now has other stocks listed there. And hopefully other conglomerates and other big blue chip companies that are not entirely Nigerian but doing business in Nigeria, we see that there's an opportunity. Because when you list, you have visibility. When you list, you have access to capital from the capital market easy and faster. When you list, you create liquidity for your shareholders. And so it makes M&A also easier. And so there are advantages to being a listed firm.
All right, now let me move on to some other news that kind of impact the economy somewhat. We had this week, we kind of had some double talk from the debt management office. Earlier, they first said they're not looking at the possibility of doing Eurobonds, and then later on, they're talking about the likelihood of that happening in there. What does it mean for us and in funding our budget?
Well, I think that it's an offshoot of the fact that we don't have the Minister of Finance who is supposed to direct that whole space in place. We don't have the economic management team or the economic team that would advise the president in place. When you have the Minister of Finance, the CBN governor, the DMO, SEC, all of them that are in the finance space together and sticking together to craft our policy, then doublespeak will be reduced. There was a time we took the decision to reduce borrowing in Naira because of the cost and increase borrowing in FX because there is no FX exposure for Nigeria. Remember that our main earner is oil, which is paid in USD. And so considering the fact that USD funding is cheaper, I think that that's the way to go. So when I heard that they were not going to do any Eurobonds anymore, I was wondering, are we reverting to having to fund entirely and majorly through Naira funding, which is expensive? Because what's happened is that you look at our debt position in the last 4 years, thereabout. We're doing over 20 trillion in debt today. It's not sustainable. So what you need to do is to reduce your debt service. If we're spending 60% of our income, 60 kobo on every 1 naira to service debt, that's not sustainable. You can't grow infrastructure. You can't invest in capital by doing that. So we need to shift to cheaper sources of funding the much needed infrastructure. And I think that borrowing in foreign currency is the way to go.
All right, then let me also move to something else that happened yesterday. Yesterday, the news came about the appointment of the new group managing director for the NNPC, Mele Kyari. I'd like you to speak to this appointment, and also, yeah, we still haven't seen the cabinet yet. You know, so we're still expectant. You know, what this means for the economy of Nigeria going forward.
Well, I'd like to give kudos to the government for making that announcement as quickly as they did. So the present MD is still there. He's leaving in a few weeks' time. And so you have someone who's going to be working with them, and so there's going to be a seamless transition. Oh, how I wish we've done the same thing with the cabinets. So for the NNPC, there are no ambiguities. You know what's going to happen. You know who's taking over. It's somebody who's been also in the NNPC before, and so you respect that he has experience and he'll be able to run the agency well. But it's important that we send the right signal across board. This is right signaling for me. The tenure of the NNPC MD is due in a few days to come. This is the person that is taking over. These are the people that are going to be working with him. Continuity, no time to waste time as it is. So I think that that's the right thing to do. And I want to urge the government to do the same with other things. When boards of government parastatals come up for replacement, go ahead and replace them. And I'm hopeful that we will see the cabinet sooner than later. Because you see, every day that passes is time wasted. And 4 years is not a long time.
Yes, we've seen 4 years is not a long time. Also, still on the presidency, you know, we saw the President Muhammadu Buhari talking about the fact that he's asking the government to look more in generating internal generated revenue. You know, when you look at that, though, is it that the governors have not been doing quite enough, or does more still need to be done?
For most states, more needs to be done. For some states, if you look at what has happened in the last few years, what has happened in most states in IGR is that IGR has actually grown for very many states. But the quantum of growth is what is the issue. It's still very minimal compared to what it ought to be. I think that governors need to begin to see their states as a balance sheet on its own, to begin to work towards growing your own GDP as a state and looking at how to be creative and making yourself a hub. I want to see a governor that takes a strategic decision that this is what we want to do. We want to create an avenue in this aspect of the economy. So we want to become the hub for IT. We want to become the hub for manufacturing. We want to become the hub, whatever it is. Create the incentives. Give what government can give. If it's land, provide. If you can give any breaks, maybe rates or taxes that you can give breaks to companies and attract them. If you can provide infrastructure that make people know that this is a state to go for this. What happens is that over time, your IGR begins to grow. But it's a two-edged sword. In trying to go IGR also, we note that there's been duplicity of taxes. So the entrepreneurs are the ones bearing the brunt. So the governors are trying to grow their IGR. You're squeezing the entrepreneurs, squeezing the small businesses to pay taxes, pay radio permits, TV permits, tenement rates, payee. FIRS is calling you, the state tax council is calling you, the local government is charging your cars for taxes. We have to be careful. So it's a two-edged sword. Yes, you need to grow revenue, but you don't have to stifle business, because when you stifle business, then people begin to, what do? They reduce their costs. To reduce costs, they let people go. They let people go, unemployment grows. Unemployment grows, then you have restiveness. Restiveness grows, then you have Boko Haram, then you have kidnapping, then you have all that.
All right, so it's a wide nexus then.
It's a domino effect.
Then. Thank you so much for your time on the show, Sam. I've been speaking to Sam Chidoka. He's the MD and CEO of Kairos Capital.